Hey everyone, Chris Johnson from Monday Morning. Everybody's looking for bullish signals since the market's been roaring through May, right? We're going to hit some seasonal weakness in June, but last week, 8 different companies on the S&P 500 gave us bullish golden cross signals. I'm going to walk through a couple of these and tell you what a bullish cross signal is, but one of them stands out. It's Ulta. It was one of the best performers the last time consumers pulled back on spending the same way that they're doing right now. And this stock is getting ready to take off another 30 to 50%. I'll explain everything behind why and how you can trade this. Let's jump into it right now. All right. I've been talking for the last couple months about death crosses. We saw one on the NASDAQ 100. We saw one on NVIDIA, Microsoft, Amazon, you name the company, it had a death cross. What is it? Well, let's take a look real quickly at what a death cross is on the screen. Very quick. It involves the 50-day moving average and the 200-day moving average. What a death cross or a golden cross tells us is that momentum is accelerating, either to the downside when it's a death cross or to the upside when it's a golden cross. So golden cross good, death cross like it sounds, it's bad. Here's the example of what we saw with NVIDIA. This was back in March of 2025. Right there it is. Here's your 50-day moving average, that green line. Here's your 200-day moving average, that red line. And when the green crosses below the red, as simple as that is, in this case right now, it is telling you that NVIDIA's momentum is turning even more bearish. You can see that we saw NVIDIA actually fall another 27% after that death cross. The stock has now come back up above its 50-day moving average, but we're not out of the woods right now yet. We've seen a lot of headlines around NVIDIA and the semiconductor companies. That's for another video at another time, but notice that the stock's looking a little toppy. How about a golden cross? So we've been talking about those death crosses. I like the golden crosses, especially when we're looking for these opportunities in a market that is trying, at least struggling, to get to some positive ground here. Well, here's exactly what a golden cross looks like. That 50-day moving average, the green line, is going to cross above the 200-day moving average. And I bring up the Huntington Ingalls industry chart on purpose. There's one criteria I always like everybody to apply when they're looking at the golden or the death cross, and that is that both trend lines are going in the same direction, or they have the same trend or slope. Notice in this case that 200-day moving average is actually trending lower, and the 50-day is the one that's trending higher. I wave this off and I say, no, this is going to be something where the market has to figure it out. You're going to see more of a transitional period for the stock. It'll trade sideways until that 200-day moving average starts to edging a little bit higher, and that's when you get that momentum swing that's going to take the stock higher. I mentioned there were 8 different companies that had, in the S&P 500, that had golden crosses. And if you look at the website, mondaymorning.com, you'll actually see the featured article right up there about those 8 golden cross stocks. It's going to go through exactly what a golden cross is, why it matters, what it tells you, the facts about how to use them, and then I go through all 8 of those companies. Now, I don't want to spend the whole time going through all 8 of those companies because one of these stood out in particular this week when I saw it, and that is ticker symbol ULTA. Now, if you're not familiar with Ulta, they're a cosmetic company. You'll see them operating a number of the strip malls, those outdoor centers, etc. And they're unique in that they really provide, both for men and women, those self-care products. The term self-care has turned very important here to everyone over the last 4 or 5 years, let's call it. When we went through the recession a few years ago, everybody still found money to spend money on self-care, even though we were tightening up those purse strings. We're in that situation right now. If you look at it, whether it's the tariffs, whether it's inflation threatening to come back, whether it's interest rates higher, consumer confidence is very low right now as we head into the summer months. And unfortunately, this is when most people are spending money. We're out there traveling and doing other things that are discretionary, right? So you'd expect to see companies like this see fewer dollars coming in the door. Well, guess what? Ulta just announced their earnings last week, and that's part of the reason why we got this huge 20% jump, and it pulled back to about a 13% after the day was over on Friday. But the company increased their top-line revenue by 4.5% on a year-over-year basis. The quarter before, they actually saw it shrink by 1.9, and the quarter before that, it was 1.7%. So this has kind of been a sticky point for Ulta over the last couple of quarters. But this quarter, they came roaring back and grew that revenue 4.5%. At the same time, we saw those earnings come in 89 cents better than analysts expected. It was at $500.81 was the consensus estimate, and the company came in at $6.70. Wasn't as good a beat as last quarter. Last quarter, they were really getting down on their cost and bringing their margins back higher. Quarter before that was $5, but bottom line here is that revenue and earnings are right now growing on Ulta, and they've got one great tailwind, in my opinion, and that is you and me and what we decide to spend our money on. Let's go back a couple of years here. When we were in the recession, we had a little bit of a bear market. Inflation was obviously a thing then. We cut back on groceries. Eggs were going through the roof. We cut back on cars because car prices were going through the roof. If you looked at the Manheim used car index, it was going through the roof. It's starting to go up again now, along with auto parts because of obviously the implications of what's going on with the tariff or the trade war. But when you look at what people spend money on, they'll cut on groceries. They figure out that they can go to the Olive Garden and other restaurants, and they can actually eat a little bit cheaper for a family of 4 or 5 than going to the grocery and buying it, right? But we all still go out and do those little things that indulge ourselves. We take care of ourselves. Self-care has become an important thing. Nobody does this better than Ulta in terms of the different products that they offer shoppers and the different price points. They have price points that go from a couple bucks all the way up to hundreds of dollars for anything that you want to do in the store, right? So they give you a diverse product line, and they bring people in during the times when we're cutting back on spending. That is one of the reasons that you're not only seeing the management start to look forward and saying, hey, we believe that we're going to see improving margins, improving revenue, where a lot of companies are starting to pull back on that guidance. Ulta's leaning into it because they know that the consumer is going to stick with the product. It's not that it's inelastic, but think of it as soda, or think of it as some of these staples that we normally look at that you have to buy. People prioritize buying things to take care of themselves. So that puts Ulta in the driver's seat here as we head into the summer months. Obviously, expect to see a lot of people spending more money on those skincare products, etc. And again, very inelastic. But the thing that put it up on my target was this golden cross. And here is the pattern right here. I already mentioned it. I'm not trivializing it when I say red crosses above green. It happens to be the colors that I have, but this is the 50-day moving average. Let me give you a little more detail on the 50-day very quickly. The 50-day moving average is that one trend line that if you say the trend is your friend, one of the most popular sayings on Wall Street, guess what? This trend line personifies it. It identifies, it defines the trend is your friend. This is the one that all your Wall Street traders are going to watch. This is the one you'll hear the media talking about. The 200-day is the second most talked about, but the 50-day, because it's a little more responsive, it is the one you want to watch. The trend is your friend. Now, a little bit of a rule here for you. Years and years ago, I tested all of the S&P 500 companies using their 50-day moving average and whether or not it was in a bullish trend. And a bullish trend is just identified whether today's reading is higher than 5 days ago, 5 is higher than 10 days ago, and 10 is higher than 15 days ago. It's a very easy measurement to make, and right about in here is where you're going to get that point where you can say officially this has turned bullish on Ulta. At that point, write this down. At that point, you've got a 2/3 chance the stock is going to close higher every day that that trend remains in a bullish trend. Write it down. Every day after a 50-day moving average turns higher, it's ballpark, but right around 67% of the time, you're going to see that stock close higher the next day. The trend is your friend. The reverse of that is true as well. All 500 of the S&P 500 companies, this is 10 years ago when I did the initial test, but I update it every once in a while. Whenever the trend is going lower, there's about a 64 to 67% chance that that stock is going to close lower the next day as long as that trend is in a bearish trend. And notice the trend that you've got here in the stock. It is a great general rule for any investor to use. Apply it today. So when we combine that with the 200-day moving average, which is the longer moving average, it's the one that really starts to identify a longer trend for the stock, this is where we get that golden cross. And we've seen that the stock closed above. This is Ulta, closed above that 50-day, then came above that 200-day. And you'll notice these little jumps that the stock makes. That's because the market is watching those technical trend lines closely. And whenever we see a stock move above its 50-day, you'll usually see a little more volume trading and the stocks start to jump a little bit more. Same thing happens when you get above that 200-day. And notice the support that you have there as well. This is why you watch these two trend lines more than any other out there. I'll show you one more in just a second on Ulta that you want to watch as well. But notice them now, we're catapulting higher, obviously, after that earnings announcement. The 4.5% revenue is what got everybody because everybody was worried about the consumer. A little bit of a wall of worry here in that you saw consumers pulling back. That confidence is moving lower, and a lot of the analysts said, nah, we think that we're going to see some revenue slow down in companies like Ulta. They delivered with that 4.5% growth, and that's why you get the stock that catapults higher. The expectations were low. Ulta came in above those expectations and then said, looking forward, we expect more of the same. So what do I expect to see now from the stock? And I have to back away and look at the monthly moving average as well. And monthlies, you can just pull up a chart. A 20-month moving average is your standard line that you want to start watching whenever you're looking for bull market and bear market trends. So we'll just switch over to this monthly chart here, and I'll identify that long-term trend that is very important right now to Ulta. Besides that 50 and that 200-day moving average, I want you to watch this blue line. That's a 20-month moving average. From a technical analysis perspective, this is the line of demarcation between a long-term bull and bear market. Now, when I say that, you'll want to notice that over the last couple of months, it has been trading, Ulta has, in a long-term bear market. And we saw those expectations come down because everybody expected the consumer to be slowing down because we're worried about inflation. We're worried about the tariffs. We're worried about everything right now, interest rates. So expectations have been very low for Ulta, actually slipped into a long-term bear market. But here in the last week, 2 weeks or so, we've come back above that 20-month moving average. I love this because it starts to look like this period here where we tested the 20-month moving average. And guess what happened then? That was April of 2022. And if you recall, we were in the middle of a bear market for the rest of the market. We saw the Magnificent Seven stocks that were moving lower. Everything was going down except Ulta. Why? Because it has that demand that seems like it is just not going to go away because we tend to spend money on things like this staple, consumer staples, obviously, but it's not a staple. It's kind of a luxury item. People are willing to spend the money on that self-care. This is what I expect you to see from Ulta over the next 6 to maybe even 9 months or so. I expect, let's go back to that daily chart. Well, we can stay here on this chart for a moment. I expect that right now with the stock trading around $470, over the next week or so, we're going to see investors pull back and actually do a little bit of profit taking. Let's face it, when you see a stock move 13, 14, 15, 20% in one day, you have some short-term selling pressure that's going to come in. I expect that short-term selling pressure to bring the stock down to about a $465 price tag, and that's where you're going to see longer-term buyers start to enter the market on the stock. Now, from there, I look for the stock to go way back up to those highs that we saw during that bear market. If we notice, this was the stock that had everybody scratching their head. We went well above that 570 up to or 550 up to that $575 level. And literally, this was one of those stocks that nobody could figure out why, but it came down to they just have that inelastic demand even when consumers are pulling back. Right now, the price target goes up to $575, and then I add another $25. I see $600 out of Ulta over the next 6 to 12 months or so. Now, How do I trade this as an investor? Well, if I'm just a buy and hold investor, I look at the stock at 465, and I wrote something on the website, moneymorning.com, about the taco trade, which everybody's writing about. What you do is you put in a limit order that's good till cancel at 465, and we wait until the next round of selling comes from either tariff announcements or some sort of headwind for the market, and you get into the stock at 465, allow that to ride up to a $600 price target, and then I usually put a trailing stop on those myself in my personal trading. The second way, for those of you that don't want to go out and buy a $465 stock, you can go into the options market and start to look at the leaps. The June 2026 leaps right now offer a good opportunity for the $500 strike at the current prices they're trading at on Friday. That if we get that move up to $600 using theoretical option pricing models, the Black-Scholes option pricing model, if we get up to that price before December 1st of 2025, that option's going to be up about 100% when you're up about 36% on the stock. So a little bit of a way to get into the stock at a little smaller price, but leverage that with the power of a leap option. As always, make certain that you've got the education and you talk to a professional, both on the tax side and your investment professional, about trading options in your account. But this is an effective way to take a position and allow it to grow with some leverage on a stock like Ulta. So that's it. You've got a great opportunity here as far as I see it. Ulta, along with these 8 other companies, Intuit was one of them. If you want to see the rest of the list, go to moneymorning.com. I've got all 8 of them up there with a little bit of a profile and their stock charts. It'll give you a little bit more bullish fodder here as we head into June. Keep your eyes on what's going on in the market over the next couple weeks. The next 2 weeks are actually a little seasonally weak for the S&P 500. July is the week when you want to see stocks coming roaring back, and that's all because earnings season starts back up again. And then I'll be talking to you in July about how you want to get out of this market and protect yourself in August and September, 2 worst months of the year. I'll help you avoid the losses that they usually bring to average investors. So there you have it. Make sure you visit Money Morning on a regular basis. Sign up using the QR code for our special reports. We'll give you the edge that you need to beat the market. We've got a 5-stock watch list of the week that comes out every week. Also reports on the next spectacular 7 is coming right now, and that's the replacement for the Magnificent 7. And a nice report on the AI nuclear movement. You've heard about companies like Nano Nuclear Engine or Energy and a few others. We've got nice detailed reports as well as investment ideas on those. Till the next time, I'm Chris Johnson with Money Morning, wishing you the best trading success. Have a great day.